Deciding when to claim Social Security benefits is not a one-size-fits-all decision. Every retiree has their own special circumstances, and the consequences of making an uninformed decision can cost retirees, especially couples, hundreds of thousands of dollars over their lifetime. Today, we will explain the basic Social Security terms and rules that affect the claiming decision, focus on maximum life expectancy and the difference between spousal benefits and survivor benefits, and show a case example that illustrates some of these rules. I'll also explain how I can help you make the most optimal claiming decision. The Social Security program is extremely complicated and confusing. Many retirees rely on Social Security for the majority of their retirement income. It is their largest asset. Although you may not realize it, when and how you claim your benefits is often the biggest financial retirement decision that you will face. Social Security provides a number of benefits that address the risks associated with retirement. Your retirement benefits are like a defined benefit pension or an annuity payout upon quitting work that is paid for life and with cost of living allowance increases. Survivor benefits are a form of life insurance. If the breadwinner of the family dies, even at a young age, leaving a spouse and minor children. Social Security disability insurance is not just for the elderly. The sobering fact for 20-year-olds is that more than 1 in 4 of them will become disabled before reaching retirement age. And finally, Medicare is the largest payer of the health insurance and health care in the United States. This medical insurance does not cover 100% of all health care costs in retirement, but the monthly premiums cover a significant portion of hospital stays, doctor services, and prescription drugs. As we all approach retirement age, a number of decisions are forced on us that can have a very large and costly financial consequence if we are not well informed. The Social Security Administration has 2,728 rules, with exceptions to those rules, and therefore thousands of possible claiming strategies for each family. Studies show that 96% of retirees do not optimize this claiming decision. They are simply not well informed and leaving money on the table. This is because there are few reliable resources. Social Security Administration is not allowed to give personal claiming advice. There is a tremendous amount of misinformation and actually false information sometimes in the press, and we don't know who to turn to for help. The average 2023 Social Security benefit is $1,827 per month, or about $22,000 a year. This may seem like a lot to some and not much to others, but Social Security is not meant to replace 100% of earnings. It replaces approximately 40% of a low-wage earner's income and less than 10% for high-wage earners. But $22,000 amounts to $550,000 for a retiree who lives 25 years in retirement. And some couples can reach as much as $2 million. This is a significant asset that you have been paying for years. The majority of retirees, even though this income is their largest asset, simply claim as early as possible at age 62, while not understanding the long-term consequences of that decision. This is a screenshot of our RSSA roadmap software showing the lifetime amounts Alice and Peter will collect if they file at various ages. They have a 12-year age difference. You can see that the lifetime differences between collecting at age 63 and 70, that gives them the maximum life amount of $1,585,000. And it is an increase of more than $375,000 compared to the lowest amount in the lower left-hand corner of $1,208,000 if collecting at age 70 and 62. Those amounts are at net present value. We are looking at the two extremes, But the importance of the analyses is that they are able to see all the options and choose the one that fits their financial situation. It is rarely the maximum lifetime or the lowest amount, but somewhere in between. These types of analyses are possible with the predictive planning tool of powerful software that is capable of examining your relationship status, whether you're single, a couple, divorced, or widowed, relative ages and earnings for couples and divorced individuals, maximum and anticipated life expectancies. If you have dependents, such as your spouse, your minor children, disabled dependents, about pensions, either whether you pay taxes on them or not, and how long you're planning to work, and many other personal details. So let's talk about maximum life expectancy. That is maximum, not average. Insurance companies often use average. We're going to talk about maximum. You want to avoid the danger of underestimating your life expectancy and outliving your funds, also known as longevity risk. There are a number of risks in retirement, and running out of money is one of the top worries for retirees. Others include rising healthcare costs, inflation, and market risk. This graph shows the life expectancy probabilities at age 65 for women, men, and couples. For instance, a 65-year-old woman has a 71% chance of living to age 80 and a 31% chance of living to age 90. A 65-year-old man has a 60% chance of living to age 80 and a 20% chance of living to age 90. But for couples, at least one individual has an 88% chance of living to age 80 and a 45% chance of living to age 90. This statistic is important to keep in mind when discussing Social Security survivor benefits, which we'll soon go over. Okay, spousal benefits. A spousal benefit is a benefit that one spouse receives based on the other spouse's earning record. The other spouse must be collecting their retirement or disability benefit for a spousal benefit to be paid. The maximum spousal benefit is 50% of the other's primary insurance amount, or PIA, if collected at full retirement age, which is FRA. When applying for benefits, if entitled to both your retirement benefit and the spousal benefit, only the higher amount of the two will be paid. The requirements for ex-spousal benefits are similar if the couple was married for 10 or more years and the recipient is currently single. To determine ex-spousal benefit amounts, contact Social Security to request your ex's PIA or primary insurance amount. You will need to provide your ex's birthday, place of birth, and the details needed to show your marriage lasted for 10 years or more to get this information. By the way, domestic partnerships and common law marriages fall into this category of spousal benefit. This is a screenshot from the RSSA Roadmap software illustrating spousal benefits increase up to full retirement age when they reach 50% of the other spouse's primary insurance amount. You may want to study the chart a little closely. In this case, the PIA is $3,708, which is 2 times $1,854, which is the average individual earner's PIA. So we're using it for this example. On the other hand, survivor benefits are paid when one spouse has died. They are often confused with spousal benefits when both spouses are living. Survivor benefits are a topic that couples should consider carefully since the surviving spouse will inherit the larger of the couple's benefits with a few conditions. Eligible spouses include widow and widowers, domestic partners, as well as common law spouses who can begin collecting survivor benefits as early as age 60, but at a reduced amount. Each year a surviving spouse waits to collect, the survivor benefit amount increases up to full retirement age when it is 100% of the deceased's benefit. Also, if eligible for their own retirement benefit and a survivor benefit, one may be collected first, even if it is smaller, and the other later when it becomes as large as possible. Disabled widows and widowers can begin collecting survivor benefits as early as age 50, but again at a reduced rate. A special rule called the widow's limit is in place to protect survivors whose spouse collected their benefits early. This rule allows the survivor to collect either their spouse's benefit or 82.5% of their spouse's PIA, whichever is higher. With a full retirement of 67, if the deceased spouse had collected at 62, they were only receiving 70% of their PIA. The widow's limit is a helpful increase for the widower in this situation. If you'd like to meet with me, I am happy to provide a no-obligation initial consultation. This gives you the chance to ask questions, and I can provide you with insight into Social Security rules that may affect you. As an RSSA, I have been educated on detailed Social Security rules and trained to analyze and explain your claiming age choices. Our Social Security Roadmap software includes all possible Social Security rules. If you'd like to proceed with an analysis, I can even give you access to the software so you can enter your initial information if you'd like. Given that our Social Security benefit amounts change every month from age 62 to 70, there are thousands of possible claiming ages. The software generates an extensive 20-plus page PDF report that includes lifetime, annual, and monthly benefit amounts, comparison graphs and tables, instructions on filing, and rule explanations. I'll walk you through the results and various claiming options so you are completely comfortable with your ultimate decision. Seeing the actual dollar amounts makes it much easier for you to make that optimal claiming decision. In conclusion, Social Security is a significant and large asset, much more money than people realize. You should take particular care when deciding how and when to claim your Social Security benefits. This decision should not be done in a vacuum, though. When integrated with your complete financial information, including other income, expenses, assets, retirement accounts, taxes, and legacy planning, the choice of making an optimized Social Security decision can have an effect of extending the life of your portfolio and increasing your standard of living in retirement. I hope you've gained some valuable insights into the importance of Social Security and really understanding your options before you file to collect benefits. Always feel free to reach out to me with your questions and your comments. It's been a pleasure presenting for you today, and I thank you so very much.